Welcome to The Explainer. Our goal is pretty simple. We take complex analysis and distill it into clear, focused presentations for you. So today we're unpacking a really urgent forecast from analyst Michael Oliver. He's talking about a major financial shift, and it all starts with this powerful statement. His whole point is that the signs are already here, basically hidden in plain sight. Here's how we're going to break this down. We've got 4 parts. First, we'll look at the hidden risks Oliver sees in the stock market. Then, we'll get into why he thinks Bitcoin could actually be a trap. From there, we'll dive into the powerful case for physical silver and wrap up with his explosive price target. Okay, let's dive right in. Part 1 is all about a hidden risk in the stock market, something Oliver believes most investors are totally missing right now. On the surface, everything looks pretty good, right? The market keeps inching higher, and the general feeling is that, yeah, it's a bit frothy, but it's holding up. But Oliver argues this is just an illusion. He points to the fact that only a few stocks are driving all the gains, which is a classic sign of some serious internal weakness. He's identified this very specific and, frankly, ominous pattern. It was first detailed way back in 1958 by Edwards and McGee. Basically, you get higher highs followed by even lower lows. It's a sign of extreme volatility, a signal that the market has completely lost its direction. And he calls it the most dangerous setup he's seen in decades. The best way to picture it is like a megaphone. These wild, unpredictable swings aren't a sign of health at all. In his words, it's a sign that the market is dying. It's kind of lulling investors into a false sense of security right before the floor is about to give out. It's this massive battle where both the bulls and the bears are just getting exhausted and nobody's in control anymore. Now, this is absolutely critical to understand. Oliver is not predicting some gentle correction or a slow downturn. He's forecasting a sudden, violent chain reaction. He says that when this pattern finally completes, it doesn't just break, it detonates. The drop will be so catastrophic and so fast that it leaves zero time for investors to try and reposition. So, this leads to a pretty big question. If the stock market detonates, what in the world happens to assets like Bitcoin? And this is where Oliver's forecast gets, well, even more controversial. He goes right after the popular narrative that Bitcoin is this safe haven asset, the alternative to a failing financial system. He says its recent behavior tells a completely different story. When you put them side by side like this, something crucial just jumps out. Oliver's analysis shows Bitcoin is not behaving like gold at all. It's behaving like a high beta tech stock, meaning it's super volatile and moves almost in lockstep with the NASDAQ 100. It thrives on that same excess liquidity and low fear environment. So in a crisis, he argues it's not going to be a refuge, it's just going to be collateral damage. And get this, at a time when a lot of people were calling for new highs, he pointed to $110,000 as a key level. He warned that if Bitcoin couldn't break above that decisively and instead fell back, it would be a huge red flag, suggesting a lethal crash structure was being put into play. And the fallout from that, it would be immense. He foresees a rapid drop. We're talking more than 50%. And because so many major corporations and funds are now so deep into crypto, this wouldn't just be a crypto thing. It would be a financial and psychological ambush with major real-world headlines that would ripple right through the entire stock market. Okay, so if capital flees stocks and crypto in a total panic, where does it go? Oliver's argument is that it's not going into cash or bonds. It's going into the one asset that represents physical certainty, silver. So the first pillar of his argument is this relentless, non-negotiable industrial demand. Nearly 60% of all silver gets consumed by industry. And this isn't optional, nice-to-have demand. It's absolutely essential for the tech supercycle we're in, for solar panels, EVs, 5G, AI servers. This demand is locked in, crisis or no crisis. This brings us to the supply side. And honestly, the numbers are just staggering. This is the projected supply deficit for 2025 alone. The world is on track to consume 206 million more ounces of silver than it produces. This isn't just a temporary little shortfall. It's a massive and accelerating structural shortage. And you can see the consequences right here. It's pretty stark. The registered inventories on the COMEX, which is basically the world's primary metals exchange, the market's safety stock, they've collapsed by 70% since 2020. That safety net that's supposed to cushion the market is simply vanishing. The shelves are getting barer. And here's the problem. You can't just flip a switch and get more silver. Most of it comes as a byproduct of mining other metals. New projects take years to get going, and existing mines are facing huge challenges. All of this is creating a perfect storm where surging inelastic demand is colliding head-on with a supply chain that is just critically constrained. So, when you combine all this, the market instability, the flight to safety, and a massive supply shortage, where does that leave the price of silver? Well, this is the final and most explosive part of the forecast. Oliver completely dismisses the historical price peaks we've seen around $50 an ounce. He calls them phantom or idiot highs because they don't even begin to account for decades of monetary degradation and currency devaluation. In real, inflation-adjusted terms, they're pretty much meaningless. And a quick look at history shows exactly why he's so dismissive. Both the 1980 and the 2011 spikes were incredibly brief. They literally lasted just hours or days before collapsing. So he sees them not as some kind of unbreakable ceiling, but just as fleeting, unstable events that happened in a monetary environment that's completely different from today. So he lays out this multi-stage process. First, a powerful blast right through that psychological $50 barrier. He believes that move alone will trigger a gush of buying from all the investors who missed out, and that will propel silver up to $60 or $70. But that's just the next stop. The ultimate target? Around $200 an ounce, which he argues is simply where silver needs to be to match its past peaks in real, spendable terms. Now, to be really clear, this isn't being framed as some short-term speculation. It's being presented as the logical, mathematical conclusion of a system that's facing a dual crisis: a crisis of confidence in paper assets and a crisis of supply in a critical industrial commodity. And that wraps up our explainer of Michael Oliver's forecast. It paints a really stark vision of a great wealth transfer, and it leaves us with one final provocative thought. A historic shift in value could be just around the corner.